Investors and traders, welcome to the channel. Market chart pattern today is 8th of May 2024. Hope everyone is having a great day. In this video segment, we are going to take a look at the key US markets. We will start by taking a look at the dollar index. Then we'll also take a look at the Bitcoin market, and also we'll take a look at the Euro USD to fully understand the strength or the weakness coming into the US dollar. And then we will also take a look at the debt markets through the eyes of the US Treasury bond futures. So we'll take a look at the shorter term 2-year Treasury yield. We'll take a look at the 10-year Treasury note futures, and then the longer term 30-year long bond futures. And we will also review TLT, which is the 20-year plus duration Treasury bonds. Then we'll a brief look at the gold market, and then we'll do a deeper dive into the stock indices. So this video is going to be a little bit shorter video because not much has changed since the video which we did yesterday in terms of the key patterns that we have been watching. So I will not do a lot of explaining of those patterns. We'll just review the price action for today, and I highly recommend that you go and watch the video of yesterday, and I'll put a link to that in the description and also towards the end of this video in the captions. As always, this video is for educational purposes only, and it is not a financial advice. We are taking a look at the daily chart of dollar index, and what we can see is this market, after moving below the 38.2% retracement around 105, it has made a slight recovery. So we have seen 3 bullish days in the dollar, where the dollar has in fact been gaining, but not at a very strong pace, the kind of pace that we had seen beginning of April, for example, in beginning of middle of March as well, then here again, then here again. And it's moving right into this 20 period moving average and the 8 period moving average, which could likely be a resistance. So we'll just keep on watching this. There is some strength in this market which is coming in, but looking at the way the market is moving, there doesn't seem to be a lot of strength yet. We haven't seen any wide-ranging bullish bars. Now let's quickly take a look at the Bitcoin as well. So here we go. This is the daily chart, and here what we're looking at is also pressure coming into the Bitcoin market as well. Look at this trend line. The market went as high as retraced about 50% of this move, and now it's just really tugging right into the between the 20 and 8 period moving average. But from a shorter term momentum perspective, the market actually closed below the 20-day moving average, and the 20-day moving average is above the 8 period moving average, so the momentum needs to improve. Now one of the key things is that the subscribers will know, who had been watching for quite some time, we were really carefully watching this level, level 60,000, because it's 38.2% retracement of this low to this high, and also we had the 1-to-1 price projection, but the price moved lower to the 50% mark, and it has tried to make a recovery high, but it appears that it's just also lagging as the US dollar gained for the 3 consecutive days. We have seen 3 bearish candles here, so the US dollar is influencing the Bitcoin as well, in my opinion. Now if we just take a look at the Euro USD, and it's important to take a look at the Euro USD because the dollar index is about 51% Euro currency. So here it's kind of a mirror image of the dollar index, but not exactly. So we have seen 3 inside bars. In fact, looks like, unless it really breaks out of this trend line, the 4th day of inside bar as well. One of the key things is that this support, which came in around 106, is really strong support, because we have a number of these Fibonacci patterns and ratios coming together here. So I'm not going to go into the details because it takes a bit of a time. So as long as that level is held, on the flip side of the dollar index, we think it is a pretty important bottom, and now just really waiting for this trend line to be broken to the upside. That way further upside in euro currency is expected, and I believe this week, tomorrow, Thursday, there's some economic news coming out as well with regards to euro, so it'll be interesting to see. Now we'll move to the debt markets. We'll take a look at the two-year treasury note, it is in terms of the yields. And here we can see is that the market, the yields are still below this trend line after peaking at or making a secondary high with respect to this high on the 19th of October at the 78.6% Fibonacci retracement and the one-to-one price projection. Now the pattern, if it is likely to move in this pattern formation, in fact calls for the prices, excuse me, for the yields to drop as much as 3.9%. That pattern is still there, but we need a little bit further confirmation. Now it's good to see the yields actually dropping below the trend line, but this 38.2% retracement coming around 4.69 is really key. This is what the market needs to break to the downside. That will be a break of the 38.2% retracement of this entire move higher, and also the break of the structure coming from this point B here. Now if we look at the 10-year treasury note, it has tried to attempt or make an attempt to rally, but the bearish symmetry is still present. So what is bearish symmetry? Every time the market made a move of this much in terms of magnitude, it's been met with sellers. It had reached a point which is you know which where we thought maybe it will begin to rally, which it did, but it really needs to break above 109.16, break above the bearish symmetry, for us to give more clues that this market is actually getting ready to move higher. In other words, the yields move lower, and this is more visible on the 30-year treasury bond. Here we go. So in 30-year treasury bond, this level where you have the point C, it's really important because this pattern formation around here was right at the 61.8% retracement and 1.618 expansion. So we really thought that 114 might be a really key level where this market is likely to find support, but it went slightly lower than that. Now it has rallied, and which is giving more strength that this point C is most likely a point C. And if it is indeed point C, then for this ABCD to be valid, we are waiting for the price to begin to close above 117.23, the bearish symmetry coming around 118.24, and ultimately the break of this channel here. That will just give us more confidence that this market is in fact beginning to move in this CD leg higher. And just the way what we saw on the 2-year treasury note, then the CD leg could in fact take this market to as high as 132. So that's going to be a fair amount of a drop in the yields, but again, need further evidence. This short rally was encouraging. More work needs to be done. Now we will move into the US stock market. So here is the daily chart of the S&P 500 cash index. And this is what we were discussing yesterday. The pattern formation is still there. Not going to go into the too much detail of this pattern, but it's right at the 78.6% retracement and 1.618 expansion of this swing. So this is also the ABCD. I've not labeled it here. Explained further in yesterday's video. And we were discussing the silent doji yesterday. And one of the key things that just looking on the left hand side, we had this silent doji on the 4th of March, and then also on the 30th of January. And on these two occasions we had the following day as a negative closing day. It did not happen today, so that is something to be made note of. However, the market is still right at those key price levels that we are really very carefully watching. And if the market begins to move lower from these levels, or it's not able to take out these highs of around 52.05, then the chances are it is starting its next phase of the corrective pattern that it's been in, and we could expect lower prices. However, it begins to close above that, then in my opinion this 19th of April being an orthodox low, that scenario becomes more probable. Now we'll just quickly take a look at the ES as well. So this is the futures chart. This is not the cash chart. This is the S&P 500 E-mini futures daily, and here we have this daily candle, which is a little bit different if you look at it. Again, the market is not able to take out the 1.618 expansion, and we have the one-to-one price projection ABCD right at that level as well. So the pattern from yesterday is still valid, but it formed a doji candle. So during the day, there was a lot of fight between the bears and the bulls, and then they just narrowly agreed on a price by the end close, and in fact closed about 2 points lower for the day. But look at this candle, it's a little bit different to the cash. So this is why it's important to look at the cash markets and also the futures. Futures are really good for shorter term trading, but the cash market kind of gives us the longer term picture. This is why I like to take a look at or do a holistic view by looking at the cash markets and futures as well. Okay, so now what we'll do is we'll take a look at QQQ. So this is the daily chart for the Invesco QQQ Trust for the technology stocks. And here again, we have this trend line with supply, in my opinion. And then we have the one-to-one price projection ABCD. And look at this, the market actually went right to this level again and closed slightly lower, but again, a positive day. And we'll just compare this with the futures. So the pattern in QQQ is still valid. It really needs to get above these levels to actually make this pattern invalid with a good closing higher, in my opinion. Now let's take a look at the futures. This is the daily chart of the NASDAQ 100 E-mini futures. Slightly different kind of a candle formation here, closing a bearish, not going above yesterday's high, and it's just forming another doji kind of a candle, which means there was a fair amount of trading range. So essentially, it's just nothing more than a trading range. This is what a doji is. Doji is just a trading range, and during the day, the market moved a fair amount, but again, it's just a trading day. But the pattern is still valid, and if it begins to close higher than the 78.6% retracement, which is around here, then in my opinion, this pattern that we were watching will be that things will change with regards to that, and we'll just notify you guys. Now let's take a look at the Russell 2000. This is the Russell 2000 daily small caps, and here, interesting, look at yesterday's candle and then look at today's candle on the futures chart. It closed below 2070, which is 61.8% retracement, and we did have this one-to-one price projection right here. So again, this one is really key to watch because we have a confluence of two things coming together: pattern formation and then also the Fibonacci retracement here. Something we like to pay attention to. I have not taken a retracement from here, but I believe that's the 78.6% retracement. So we have a confluence of two things. So we have the 78.6% from this swing right here, 61.8% from here, ABCD one-to-one price projection. So we have a confluence of three things. Very important level, 2070. Okay, so getting above this level, in my opinion, will begin to change a few things for Russell. Now, last but not least, I am going to take a look at the Shopify stock. I believe I missed it in my tech video that where we like to cover the tech stocks. Because the earnings came out, I really wanted to show you one thing. So here we go. This is the daily chart of Shopify, but I'm going to move to the weekly chart. Here we go. So the long-term subscribers will have seen this chart, and here you guys know that when the market went to about 78 to 80 $81, those were our targets. They were met around here. Market went slightly higher, and then one key level that we had been watching for was around $63 to $62, and that's where you see the confluence of 38.2% Fibonacci retracement plus the 61.8% retracement and this ABCD formation, which is ABCD one-to-one price projection. And after the earnings, I don't know, something was missed. Don't really know. All I know is that this level, exact level that we had been watching for, has been hit as of now, and we can see after hours the market is around 62.60. So we'll see how the market will trade tomorrow, but we do have this price level that we were waiting for to or watching for, that has been reached. So it's really important to pay attention to the price action for the next few trading days, how the market is going to react off these levels and close for two consecutive closing days, so Thursday and Friday are really important. But just wanted to bring it to your attention that this pattern that we were watching in this Shopify stock, we have reached that level. Not a very good looking candle here, but the week is not over. It's a weekly chart. And also, if we just take a look at the trend line is still there. So yeah, the chances are it might move a little bit lower, test this trend line. We'll see if it begins to close above or below the trend line. But the level around 62 that we are watching, the market has actually reached that level. Now we'll just be observing the price action, and then I will update you guys further. Thank you very much for watching the video. Good luck and good trading, and speak to you guys soon. And if you like the video, please give it a thumbs up. And if you like the way we do the technical analysis here using a pattern recognition, Fibonacci ratios, expansions, extensions, projections, then please think about subscribing to the channel as well. Really appreciate it. Thank you very much. Good luck, good trading. Speak soon.